What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in that brokerage account. They're going to give you up to 12 free stocks for just opening the brokerage account and trying out the app. There's a link down in the description box of the video. Go click on that Webull link. Open up that new brokerage account today. Go get that free stock. Go get that free money. The stock market has finally started going up, guys. This week has been a nice little run, a nice little rally. And I've been getting a lot of questions from subscribers and asking what caused the stock market to bounce. And again, guys, I'm not an expert. I'm not a financial advisor. I'm not some guy that spends 18 hours a day on the internet looking at these companies and trying to understand why they go up and go down. That's not me. But I do have 22 years of investing in the stock market through paper assets, and I'm gonna give you my opinion. At some point, guys, investors want to make money, and the stock market is one of the ways investors make money. Now, the stock market and the economy are two different things, but they are indirectly connected. So when the economy is doing bad, investors look at their investments and say, hey, do we want to keep our money here while the economy is doing bad? Because when the economy is doing bad, typically businesses are doing bad. And if businesses are not growing, that means our investment we made in those businesses through the form of paper assets are not doing well, and they're doing bad too. So let's pull our money out, put it in safety, take our profits, and wait. And then they flee to things like U.S. Treasury bonds and things like that, where they get a guaranteed rate of return on their money until they're ready to put it back in that investment. And in this case, the stock market. And that's what's happening, guys. Towards the end of 2022, investors had enough. They started pulling their money out of the stock market, and we saw the stock market start going down. Typically, when the economy is bad, inflation is up, interest rates are up, the stock market goes down, and investors know that. But now we're back into 2023, and it's a new year, and investors are saying, look, we've seen ample evidence that inflation is coming down. You look at the CPI report, you look at the PCE report, all of them are saying inflation is coming down. The Fed has already said they're only looking to increase short-term interest rates by 75 basis points in 2023. Get the Fed funds rate to around 5%. So investors know all of this. So they're thinking, okay, inflation's coming down. We kind of know where the Fed stands. It's about time for us to get back into the market. Not all in, but let's start putting some money back into companies, right? Through buying paper assets. And I think that's what's happening. I don't care what no one says, guys. The stock market is about making money. The only reason the stock market exists because it makes money for people and for companies and for institutional investors, right? It makes money. That's the reason people put money in the stock market, is to multiply their money. So at some point, investors were going to come back. And right now, they're coming back. So you look at companies like Tesla and you look at a company like Apple. Let's take Tesla first. So Tesla's fourth quarter 2022 earnings report comes out and they beat expectations. Immediately, stock price goes up 5%. And then Elon Musk says, you know something? We believe we can deliver 2 million EV units sold, delivered and sold in 2023. Big numbers, right? And now Elon is starting to act like a CEO again. Not this crazy guy messing around with Twitter. He's refocused, he's zeroed back in, laser focused in, and back in the CEO seat, running it like a CEO should run a company. And I think we're seeing that in the bump in Tesla's stock price. Last week, 2 weeks ago, Tesla was dang on near under $100 a share, guys. Last time I looked at it today, $177 a share. Less than 2 weeks, $77 a share increase. That's one of the powers of investing in the stock market. Now, I'm not one of these guys that goes around and speculates when these companies are going to go up and down. So I didn't put a bunch of money in Tesla to try to take advantage of that. I had already made my investment in Tesla months ago. And I stand by that investment because I still believe if Tesla can deliver 2 million vehicles, sold vehicles in 2023, and continue to up the ante in 2024 and 2025, and Elon acts like a CEO should act, then I think Tesla is a $500 per share company. That's my opinion, guys. You go do your homework and figure that out for yourself. But for me, that's what I'm banking on. Same thing with Apple, right? And even though Apple is not a comparison to Tesla, because obviously Apple is the most valuable company in the world from a market cap standpoint. But when you go look at their stock 2 weeks ago, they were down to $129 a share at one point. Look at them today, they're trading at $146 a share and climbing. And again, guys, that's still a bargain. That's still a discount. Tesla's still at a discount. My point is, this is how you make money with paper assets, is when you buy these blue chip companies when they're down, when they're low, or on the ascent. That's when you start, that's when you got to buy, because that's where you're going to make your net profit. Just think about it. If you were to put money in Tesla at $100 a share, and today it's trading at $177 a share, 2 weeks ago, look how much money you would have made. That's my point. Same with Apple. Had you bought Apple 2 weeks ago at $129, $130, you'd be in the green right now. It's trading at $146 and climbing. My point is, paper assets are how people make money. That's why investors are coming back to the stock market now. They believe they've already priced in what the Fed is going to do for 2023. Now, the only way that changes is if the Fed comes out when they meet on January 31 and February 1st, which is next week. The only way the stock market changes its course of upward is if the Fed comes out and does something that's not priced in. See, now everybody believes, not everybody, but a lot of analysts, a lot of institutional investors believe the Fed is going to only raise interest rates by 25 basis points next week. But what if the Fed comes out and raises interest rates by 50 basis points? And then when they make their comments, they have a hawkish attitude towards inflation and the progress we've made against bringing inflation down. What if they have a hawkish attitude, right? Then that will derail the progress we've made in the stock market, because I believe at that point the stock market will sell off because none of that's priced in, right? The market believes 25 basis points next week, and with a positive message about inflation's coming down, and we're not going to be hiking rates beyond 2023. And matter of fact, if we continue making progress, we're going to start reducing short-term interest rates. That's what the market is hoping that the Fed say next week. And that's why you see all this hype in the stock market right now because people are gearing up. They're starting to get back in there buying because guess what? They're thinking, okay, we're finna get ready to get this run, this big bull market run. And again, guys, this is just my opinion. I don't, like I said, I don't spend hours and hours a day in front of, my computer screen analyzing the stock market. All I do is buy blue chip investments, right? Blue chip paper assets, S&P 500 ETFs, total stock market ETFs, Tesla, blue chip companies, Apple, blue chip companies, Bank of America, Wells Fargo, blue chip financial services companies. That's what I do with my money. And I just keep doing that and I stay in for the long term, right? I don't put my money in there and be like, oh, in 2 weeks, I got to take it out because I need it for something. No, I don't put that kind of money in the stock market. I put money in the stock market that I can leave in there 3 to 5 years and let it mature, let it grow, let it create net worth for me. And that's what I recommend you do. Do not be putting your money in the stock market unless you have patience and you can wait and you don't need that money. If you got short-term purposes for money, don't put it in the stock market. Keep it in your savings account. Also, one other quick little tidbit. If you got high interest rate credit card debt, guys, please pay that debt off as fast as you can. High interest rate credit card debt is a financial nightmare. It really is. It's a financial nightmare. So please do yourself a favor. Don't be investing nothing in anything until you clear up your high interest rate credit card debt. Because right now it's probably at the highest rate it's been in a long time because the Fed keep increasing short-term interest rates. So every time the Fed increases short-term interest rates, credit card companies increase their rate on your credit card, which affects your interest you pay on the balances you keep on those credit cards. So the main thing is make sure you get that cleared up first. Get that consumer debt squared away. Get it cleared up. And then you take that money and start investing it in paper assets or whatever you decide you want to invest it in order to multiply it. Drop me some comments down in the comment box, guys, and let me know what you think about what's happening with the stock market this week and this tremendous rally that we're on right now. And will it last? I think it lasts if the Fed comes out next week with positive news about inflation and gives us some forward direction or forward guidance on what we can expect them to do in the near future, right? The next 6 months, 12 months, 18 months when it comes to reducing short-term interest rates. Because once they start reducing short-term interest rates, I think we'll see the stock market continue to move in the positive direction that it's moving in right now. So drop me some comments and let me know what you think about that. If you want those 12 free stocks from Webull, click on that link down in the description box, open up that new Webull account today, go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, never stop believing in yourself, and I'm gonna catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.